If you own Celsius stock or have been watching it lately, this latest earnings report deserves your attention. Celsius just delivered the biggest quarter in company history, reporting revenue of $782 million. On the surface, those numbers look incredible. Revenue more than doubled compared to the same period last year, and earnings per share also came in much stronger. Instead, the market reaction was surprisingly muted. The reason is that investors are looking beyond the headline numbers. While revenue growth was impressive, a large portion of that growth came from acquisitions. During the past year, Celsius expanded its portfolio by adding Alani Nu and Rockstar. Together, those brands contributed hundreds of millions of dollars in additional revenue. That means the biggest question facing investors today is whether the original Celsius brand is accelerating again, or whether the recent growth is mostly being driven by the newly acquired businesses. The good news is that the core Celsius business appears to be stabilizing after a difficult period. Just a few months ago, many investors were worried that the company had lost momentum. Revenue growth had slowed, and some analysts were calling the stock a value trap. However, the latest quarter showed signs that demand is improving. The company successfully worked through distribution changes, and sales began moving in the right direction again. Another major advantage for Celsius is its partnership with Pepsi. Pepsi now handles distribution for the company's products, giving Celsius access to one of the most powerful beverage networks in the world. Every truck, cooler, and retail relationship helps Celsius reach more customers. That kind of infrastructure would be extremely difficult and expensive for a smaller company to build on its own. At the same time, there are still concerns that investors should pay attention to. One of the biggest is that promotional spending has increased significantly. The company is spending much more money on discounts, shelf placements, and marketing support to keep products visible in stores. While that can help drive sales, it also raises questions about how much of the growth is being fueled by incentives, rather than pure consumer demand. Cash flow is another area investors are watching closely. Despite the huge jump in revenue, operating cash flow declined compared to last year. Part of that was due to costs associated with the Pepsi distribution transition and other one-time expenses. Celsius also faces legal challenges related to a licensing dispute that could potentially result in additional costs in the future. Despite those concerns, there are several reasons why bullish investors remain optimistic. Net income more than doubled year over year, the company maintains a strong cash position, and international growth is starting to gain traction. While North America remains the dominant market, regions like Europe and Asia are growing much faster, creating potential long-term opportunities for expansion. Wall Street remains generally positive on the stock. Many analysts continue to rate Celsius as a buy, although price targets vary widely. The debate comes down to one simple question. Can the core Celsius brand continue accelerating after the acquisition-related growth fades into the background? For me, that's the key metric to watch over the next few quarters. If revenue growth remains strong and the original Celsius brand continues gaining market share, the stock could have significant upside from current levels. However, if growth slows once the acquisition boost is fully reflected in the numbers, investors may become much more cautious. Overall, the momentum appears to be moving in the right direction. Earnings are growing, the balance sheet remains healthy, and the Pepsi partnership provides a powerful competitive advantage. But the next earnings reports will be critical in determining whether this is the beginning of a major comeback story, or simply a temporary boost from acquisitions. So what do you think? Is Celsius stock ready for its next big move, or are investors getting ahead of themselves? Let me know your thoughts in the comments, and if you enjoyed this analysis, don't forget to like and subscribe for more stock breakdowns.